Good afternoon, and thank you for joining us today. I'm Taylor Comblusier, a mining analyst at Red Cloud Securities. Today's webinar features EVNi, which is a Canadian nickel exploration company focused on its Shaw Dome project south of Timmins. The Shaw Dome area had historical production from numerous mines and hosts over 100 kilometers of prospective strike length comprised of ultramafic and mafic flows and sills favorable for hosting nickel, copper, and PGE mineralization. The Shaw Dome project also hosts the W4 zone, which contains a historical starter resource. EVNi plans to advance its flagship Shaw Dome project and tackle the growing demand for Class 1 nickel for the electric vehicle battery sector. Today, I have with me on the webinar Sean Sampson, who's the president, CEO, and director, as well as Paul Davis, who's the VP Exploration at EVNi. The format of today's webinar will be comprised of two parts. In the first part, Sean and Paul will provide an introduction to EVNi, as well as go over some of the recent news from its ongoing drill program at the Shaw Dome. In the second part, we'll take your questions live. So please send us your questions using the chat, and we'll get to as many as we can. And I'll note that you can type in your questions at any point throughout the presentation. To start, we'll handle the disclosures. So for EVNi, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the EVNi corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that today's call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for EVNi specific disclosures. So with that out of the way, I'll turn it over to Sean and Paul to update you on EVNi and what you have to look forward to with the story.
Great, thanks Taylor, and welcome everybody. My name is Sean Sampson. I run EVNi, joined by Paul Davis. He's my VP of Exploration. And together we're going to run through, as Taylor said, introductory slides about the company, and then we're excited to get into your questions as well. So we're running through the deck, which is on our website. These are our public slides, July version. So some important disclaimers and legalese. So to get us started, I don't spend a whole lot of time on the macro story, just at least one slide in my deck, but we think that EVs are driving a whole new demand category in nickel. And as Taylor mentioned, the class 1 nickel, the sulfides, that's where we're focused. And we think that the electric vehicle companies, they want the cleanest possible metal. And what we have with the Shaw Dome, it's in Northern Ontario, draws on hydropower, and we have a starter resource and good high-grade mineralization, which we think is a very important first step for having the cleanest, lowest carbon cost possible nickel. We have a massive land package, over 30,000 hectares of land. We're just southeast of Timmins. We'll show you that on the map in a sec. We have our starter resource, the W4 zone, which is 1% nickel, so good high-grade nickel, the type of grade that typically gets turned into mines. We have 15 million pounds of that. And to sum it up, we're basically Ontario critical mineral focus, so in line with the government programs, and we're funded to drill. So we've got money in the bank to do everything we say we're going to do this year. So we love our location, easy access up to Timmins, great mining camp. We love the grade of our starter resource. Plus, we're going to spend a bunch of time talking about a large scale, lower grade potential we have on our property as well. And that's across an enormous potential property. So we've got over 30,000 hectares. And as Taylor mentioned, over 100 kilometers of prospective strike. So we're working on three things: finding more nickel, getting our access to more land up on the Shaw Dome, and pulling it all together in a clean nickel business, a trademark term of ours, clean nickel. We'll talk a bit about that. So in terms of the team, I run the company with Paul. We've worked together for many years. Paul is really our expert on the geology we have in the area we're in. He spent over 20 years of his career up in Timmins. He's an expert on the Komatiates. That's what he did his master's thesis on. And he has legitimately walked and staked all of the land around the Timmins camp. As for many years, he worked for the company called Outokumpu, which was looking for nickel up in the gold camp up in Timmins. So Paul will run us through the geology in a few moments, and he'll explain about his past history. And a lot of what we're doing is area that he has already explored. So we're quite confident we know it really well. Rounding out our team on management, we have our colleague Phil, who's actually running the drill program up in Timmins. Phil worked for many years for Falconbridge and also at First Nickel. And he was a lot of time on Raglan, which is a similar type, we anticipate, mineralization to what we have on the Shaw Dome with our high grade. On our board, half of the board is from Northern Ontario. So Linda is a permitting expert from up in Timmins. And then Michael Fox is an old friend of mine. We were both on the PDAC board together. He's First Nations based out of Thunder Bay. He's a very well positioned guy, especially around interactions with government. And rounding out our board, we have an accountant and an investment banker. So it's a small, close team who has experience finding and developing assets. Here's our macro slide. So the electric vehicle revolution really is a thing. So we're seeing it now. Folks spend a lot of time talking about Tesla and Rivian, but really where the pendulum is swinging on the market is with all the other car companies. And when you stack up all of the announced plans across the OEMs, things are shifting away from internal combustion to the electric vehicles. And with that is a whole new demand category for nickel. Unlike some of the other critical metals or battery metals like lithium or cobalt, when EVs come, they're going to become a large market. Nickel already has that. Nickel has a supply-demand balance all figured out currently about stainless steel. But we're bolting on this whole new demand category. And as we have on the bottom left here on this slide, people anticipate there's going to be a shortfall between supply and demand, which is a great place to be for someone like us, a company that has what we think is a lot of nickel in the ground for development. But more importantly, when you talk to the EV companies, and of course we have a Musk slide here because we're a nickel junior, and everybody likes to talk about how he has put out the call for more nickel supply to come on. But when you talk to the EV companies, Tesla included, when they talk about the current setup with nickel, it doesn't make much sense to them because we've set up this global supply chain where ore comes out of the ground in North America, goes to Europe or to Asia for processing. None of that really makes sense to the EV companies. So you've heard this before, the domestic supply chain, the tighter supply chains, there's very likely demand from the EV companies for lower carbon cost nickel. That's what we want to deliver. And we think we're very well positioned with what we have. So the regulation of this industry is an interesting one because across broad industry, you've gotten a common acceptance now about greenhouse gas protocols and the requirement for scope 1, scope 2, scope 3. There's so much attention put on the electric vehicles as to whether they're truly a green alternative that the EV industry itself knows it's going to be regulated. So with the regulation that's already been approved in Europe, you're going to have footprint declarations on electric vehicles in 2024. So all EVs sold in Europe are going to have the carbon footprint attached to them. So that is exactly what the EV companies are building towards. They know it's happening. And when you talk to them about potential supply of input metals, they've got that in mind. So folks think that's what's going to happen across the global EV market. And it's not just going to be nice CSR reports from miners. It's going to have to be a hard accounting for what the carbon footprint is for all of the inputs to the electric vehicles, nickel included. So shifting now to what we have and what we're talking about, it's the Shaw Dome. So Taylor mentioned before, we're southeast of Timmins. We're an easy drive. So within 50 kilometers of Timmins, where we're drilling now, the drillers love it because they go home at night to sleep. Timmins itself is a wonderful mining camp, 85,000 regional population. We're within 1,000 kilometers of Windsor, Detroit, and where there's going to be new demand for nickel going into the EV batteries. And what we have initially, last year, we started the company with the Langmuir property. So that's that yellow J around the bottom of the map there. On that Langmuir property is the W4 zone, our starter resource. Taylor mentioned before, there's all kinds of historic exploration up there. So all across the Shaw Dome, we've got it marked here. There's geology that produced nickel between, say, 1% up to 2.25%. It's good historic production from the types of grades that get turned into mines. We have created this enormous land package now. We'll talk a bit about it when we're talking about our acquisition earlier this year. But you'll see we're drilling and we're exploring around areas that already have mineralization, and we have our own W4 with an historic resource. So let's jump now to the W4, which is a 2010 historical resource. This is what EV Nickel got started with last year. Paul, why don't you run us a bit through the resource?
Sure, I can do that. This was a resource that was discovered by Golden Chalice, which then became Rogue Resources. It was discovered in 2007 when they were drilling komatitic flows in the Shaw Dome. You can see the deposit itself goes down to about 200 meters depth with the inferred and indicated resources. It has about 600,000 tons of 1% nickel that is accessible by open pit from surface. What's really unique about the W4 is that it has a interesting mineralogy when you're looking at the sulfides, in that it's nearly 100% pentlandite. And pentlandite is one of the main nickel-bearing minerals that's mined today throughout the world. As an example, when you take a look at the picture A on the left there, it's a very nice massive sulfide, but that particular sample would run somewhere in the order of 20% nickel. So it's very high grade. But what's even more interesting is when you look at picture B of the disseminated sulfides, it doesn't look like much. But if we have 3 to 5% sulfides within the core, we're looking at a nickel grade of somewhere between 1 and 2%. So it's very unique. When we get to the metallurgical test work that we're completing this summer, I'm anticipating that we're going to be able to come up with a very high grade concentrate in our bench scale flotation test work that we're doing with SGS.
Thanks, Paul. So it's 677,000 tons in indicated resource, and that's above the 200 meters down from surface level. So we'll come back to the depth because we're exploring below that now. So that was our starter resource, the 2010 resource on W4. Last summer in 2021, we got in to do some initial holes and we were testing on the flanks. Paul, do you want to talk us through last summer's phase 1?
Sure. Nobody that was working with EV Nickel at the time had seen the W4 deposit prior to us doing the work last year. We wanted to put a few holes in to see, one, what the style of mineralization looked like, and two, if we could kind of expand the edges of the deposit further to the east and to the west. The drilling was near surface within that first 0 to 200 meter really range. And basically, we had some very good success with our drilling. Hole number 1 hit a very good section with one grading 1.1 meters of 8.66% nickel. Similarly to the east, when we look at hole number 9, we hit 15 meters of 1.1. Similarly, on the west side, we hit about 10 meters of 1.1%. So we were able to expand the edges. We were able to fill in holes within the resource that had gaps from the previous drilling with high grade, good intercepts from our 2010 drill or 2021 drill program.
Yeah, so that got us started last year. We convinced ourselves that the W4 goes up and down on the flanks. And then this year, first half of 2022, we've been below the W4. Paul, do you want to run us through this year's drilling?
Sure. This year's drilling, basically what we did is we came in from the north, which is a much better angle to hit the zone at. And we've had a few significant things that have come out from this drill program. We've reported the results from the first 2 holes, hole 12 and hole 13. You can see that we hit 14.3 meters of 1.5% nickel in hole number 12 with a very nice high-grade core of 5.4 meters at 2.96. Now, similarly in hole 13, we hit close to 16 meters of 0.85 with a 5.5 meter section at 1.33. And really what we've done here is that we've extended the envelope of mineralization below the 200 meter depth down to about 400 meters with these first 2 holes, showing significant widths, which wasn't in the original model that was completed by in 2011. Also, what we've done is they broke up the deposit into 3 separate lenses from that earlier resource estimate. So they had an A, a B, and a C zone. With our drilling that we've completed this winter, we've proven to ourselves that this is actually one continuous zone of mineralization. It's not broken up into 3 separate lenses. And what that's going to do is it's going to give us a more continuous resource envelope as we do it. And we should see an increase in our tonnage once we come out with our new resource estimate sometime in 2023.
So it's really exciting. So we drilled last year and we figured out that it goes up and down the trend. Now we're below it. We know it goes down. We're referring to this as the W4 extension. So we have a huge amount of potential across our land package, but W4 we think is representative of the high grade type mineralization that we have at this, and then there's other nearby deposits which have similar or better grade. So now if I move into earlier this year, we tripled our land package. So we did a deal in April where we acquired 21,000 hectares of prospective land. It came across 3 big parts of the land package. We'll show you that on the map in a moment. Paid a little bit of cash for it, some shares, and then a royalty on 2 of the 3 areas. What that gave us was a much bigger land package. It added on to that beige, onto the existing Langmuir property, and it gave us both more high grade targets, plus opened us up to something which is new for EV Nickel, large scale, lower grade target mineralization, which we'll talk a bit about. So on the high grade, there's some really interesting things for us to potentially go after. In the west, there's the Croxall target, which is an anomaly that seems like it's on the same horizon as the Redstone mine. That's the crossed hammers there on the west side. Then we have the Langmuir number 2 target. There was historical production at Langmuir number 2. There was a crown pillar collapse in the 70s, but we know there's mineralization there at around 1.5% nickel. So that would be really interesting for us to go and poke some more holes in. In addition, there's a 446 meter shaft, which we own, which could help future exploration. In addition, there's to the south on what's referred to as the Groves property group. There's an interesting anomaly down there, the Matthew, where we're going to do some initial field exploration in the coming weeks down to the south. These are potential high-grade targets. And one of the reasons we're excited about this is because we think that Shaw Dome matches up nicely in Western Australia, the Kambalda Dome. Paul, do you want to talk a bit about how the mineralization compares?
Sure. I was fortunate enough to spend about 6 months of my career in Western Australia, focused on the Forrestania belt with Okompu, but I had a chance to go to the Kambalda Dome and look at the actual type deposits that are associated with these komatiitic flows. And basically in Kambalda, it was discovered in the 1960s, and they've mined about 50 million tons of about 2% nickel. And what's unique there is when you really discover one of these mineralized flow units, they tend to be long-lived flow units that you can chase after. And once you find one in an area, the chances of finding clusters of them goes up significantly. And we see that in the Shaw Dome as well. If you take a look, the block on the right showing the Kambalda Dome is represented by the same area on the left side picture with the dashed line. And so within that, we have 4 known zones of mineralization, including Langmuir number 1, Langmuir number 2, McWaters, and W4. Having that type of density of hits, I'm very confident that there's likely more of these Kambalda type high-grade deposits within it. You can see that based upon the geology in the Shaw Dome, we have a large area of similar stratigraphy that we can chase after. And we estimate there's over 100 kilometers of favorable strike. Similarly with W4, it's a new type of zone in that it's associated with a low magnetic signature, which is different from the others, meaning that we have additional areas that we can explore for these high-grade deposits.
So this is our excitement on potential for the high grade over our land package. You know, we're pretty sure of ourselves that we're just getting started. We think it's an underexplored area, and there's a huge amount of potential when you compare it to other districts that have similar geologies, like the Kambalda Dome in Western Australia. So that's on the high grade targets. When we sort of shift over to what we'll call large scale targets, there's a couple very clear ones. In the west, the Adams Eldorado. In the northeast, the Carmen Langmuir target. Now, when we're talking large scale targets, they tend to be komatiites. 0.3 to 0.5 is our target mineralization. Deposits up near surface. And we've been churning through all that we've got on our property. So we do have historic drilling with Outokumpu, Paul's former employer, where in both the Carmen in the northeast and off in the Adams Eldorado, Paul drilled through the Dunites. And Paul, your target back in the day was you were looking for something 0.6 or better. And if you didn't find it, you moved on, right?
That's correct. We were looking for a Mount Keith analog in the Shaw Dome, and basically Mount Keith was the only known open pit at the time that had a grade of 0.6 that was economic at that period.
So it's really neat because Paul has drilled these targets before when he was looking for something that was higher grade than we know to be there. Combined with airborne, which has been flown more recently, and some other academic interpretations from grab samples from surface, which is really neat. We'll show you in a moment. This stuff outcrops to surface, so pretty cheap way to figure out what the potential grade is. And really what we're targeting is the market is rewarding deposits now, these large scale type deposits. And the great example is Canada Nickel with the Crawford nickel sulfide, which is the world, as they like to say, the world's largest nickel sulfide discovery since the 70s. And really what they did with the Crawford main zone is they drilled about 15,000 meters. They found themselves a deposit that was 1.8 kilometers long, 360 meters wide, and that was their billion tons at 0.25 nickel grade. So again, well below what Paul was targeting back in the day with Outokumpu, and also below, which you'll see, what we've found up on our targets. So again, this is our property package, but this time with an airborne. So I told you about the target in the west, Adams Eldorado, in the northeast, Carmen Langmuir. And let's just zoom in. So these are those two targets, and we've drawn in the bottom left to scale what the Crawford ovals, the Crawford deposit, the Crawford main zone on those ovals. So again, if you lay those out against what looks like the interesting magnetic intensity, which are the pinks and reds and purples, when you lay out that oval, you see it seems as though we have a number of potential Crawford mains. Again, based off of the airborne and the interpretation of where the dunites are. Now, this is the Carmen Langmuir. So again, the property up in the northeast of our land package, where we zoom in on that, and you see along the komatiitic dunites, the purple, we've got some measurements on here, and that's 6 kilometers and 4 kilometers. So there's 10 kilometers of potential strike on those units, in addition to another unit to the south, another purple. And again, we've got the Crawford oval drawn here for scale. But also you see on here, it shows the outcrop exposure with the gray shapes. And those are outcrops, obviously, coming up above surface, which have been sampled. We did our own sampling. We're still waiting for that to come back from the lab. But there's been historical sampling done. And you see the colors. So the red dots are above 0.4. In fact, the Carmen Township, as we note here, had 40 samples. They averaged 0.33%. So if we're going to target something 0.25 or better, we're very excited to figure out what's going on up here in the CarLang target. And this is where we're drilling right now with our next phase of drilling. Paul, do you want to talk a bit about, how this scales up versus your experience up in the Timmins area more broadly in these large scale targets?
Sure. As Sean had mentioned, this is really my third time in the Shaw Dome with a large property package. The first was with Falconbridge. The second was with Outokumpu when I was their regional exploration manager. And when I was there, we did drill these thick dunite sequences in Carmen and Langmuir Township. Now, I do believe that this style of mineralization is fairly common in these large dunites, but I think there's a few things that differentiate the deposits and is really going to be the thing that's going to decide which ones are developed and which ones aren't. The first thing is always the location and the access to the site. Now, it's located within 30 kilometers of a couple of permitted mills. And basically, at our Carmen Langmuir project, they've recently done some clear cutting for forestry, developed a road network, and we can drive up to the outcrops with a pickup truck. So there is no issue with access. The second thing that's going to be most important is the grade. And based upon the work with the University of Alabama and Dale Pike in the 1980s, as well as my past work with Outokumpu, I know that these dunites have significant potential to host grades above 0.3. So the grade is good or better. And then the last thing really is the amount of overburden. On our property, we're going to estimate that there's anywhere between 5 and 10 meters of overburden on average over the dunites, with about 15 to 20% outcrop exposure. So you're able to get into the actual units very quickly, which when you compare it to other areas in the Abitibi, that your average overburden depth is anywhere from about 20 to 50 meters of overburden, even before you would get into the rocks that have 0.25% nickel.
So this will be very interesting as we learn more about what we have at CarLang and then in our large-scale target to the west. As we understand it better, we'll be able to talk about how this stacks up against other large-scale targets. So to summarize, I think we have a wonderful location, a place to build a business. We've got great grade plus huge potential on the large scale as well. And then this massive land package with over 100 kilometers of strike to go after. So I spent a bunch of time talking about our finding more nickel and us pulling our land package together. Now we'll talk a little bit about our clean nickel business, which is really how we wrap it all together. So clean nickel is a term that we've trademarked. It's in the DNA of our company. And what it really means for us is questioning each step of the business. So we've trademarked EV nickel and clean nickel. We think that this strengthens our story and helps differentiate EV nickel. We are planning, as we look at building our business, looking forward towards electrifying all of our mining operations. Our area of Northern Ontario, again, draws on hydropower, so very low carbon costs attached to that. In addition, we intend, if we have multiple ore sources, to do work with sorting of the ore, which we've actually spent some time working on. We electrify that. That's an opportunity for us to potentially raise the head grade of what gets shipped to the centralized processing. And then at the processing, we're looking at creative ways to try to extract the metal out of the rock. We're doing work on bioleaching with the smartest guys in the world at Canadian labs around bioleaching. Oftentimes, folks think of perhaps industrial failures of bioleaching, but it's something that every day around the world is producing both nickel and copper through bioleaching. So we think it has a huge amount of potential to help along our clean nickel business. And then also we have the geology similar to some of the other juniors that has for carbon capture. So our rock will sequester carbon in it passively. And also we're looking now in the lab, trying to figure out how much more we can get with active sequestration. So we're wrapping that all together to try to have the lowest possible carbon cost per unit of nickel, which is very important for the new demand in the nickel space. The EV companies are going to be requiring this. And we think starting as well with the highest grade ore helps us well along in the lowest carbon cost. So the company's been very busy. We IPO'd last year at 75 cents in December. We did that phase one drilling last year. We immediately came out with the results, confirmed the W4 extends to the east and the west. First half of 2022, we tested and we've seen now that W4 extends down. April, we tripled our land package. In May, we launched our clean nickel strategy we just talked about. But we've been running up the hill and our share price has been going down like a ski slope. So despite us having tripled our land package, come out with wonderful high-grade met holes, which was a big pop in June, where folks sort of saw the headline about great grade. Stock ran for a couple of days. We said, no, this is not new mineralization. We announced last week with the W4 extension, that is what we expect to be new mineralization. But what this represents right now is still a wonderful buying opportunity for new investors. We think we're deeply undervalued. We've got a very tight share structure, under 44 million shares. So we're trading at about 8 million equity value. Management and board holds a bunch of that. Broadly defined friends and family, it's about a quarter of the float. And we have, as you mentioned, a bunch of cash in the bank. And we could pay for all of our exploration over the near-term horizon through until the beginning of next year. Quickly, comparables-wise, it's tough to do with a company that's valued at $8 million. But if I compare us to other nickel companies that are sort of pre-development nickel companies, I realize the absurdity of us at 8 million and us putting Talon up on a slide at 365. But I truly believe with our high-grade potential, we have this sort of mineralization with us. And I'll tell you, I'd much rather be permitting a new mine in Northern Ontario than in Minnesota. So there's Talon, And then in the large scale, lower grade targets, whether it's FPX or Canada Nickel, I'm very comfortable with the grade and, as Paul mentioned, the overburden, especially of our large scale versus the mineralization that they have. And then our most straightforward comparable is very likely Class 1, which has the Alexo Dundonald, which Paul helped discover. The Alexo Dundonald, they have a deposit, same grade as ours, but when we say we're just getting started, they, with their much smaller land package, have probably tapped out what they potentially have. So those are the comparables. Whichever way you sort of squint and look at it, it seems like we are deeply, deeply undervalued at the moment. So just to pull it all together, our thing is we're helping to accelerate the transition to clean energy. So we launched in June up on our phase 3 of drilling, which is up in the CarLang large scale targets. This summer, we're going to be coming out with more news about the W4 extension. That was from our first half of this year. Came out the first 2 holes last week. Very good. We expect more news on that to come. Then in the second half of this year, we'll have the news from phase 3. So that will be the drill results from CarLang. That's us talking about the large scale deposit in the Northeast. And then we're trying to wrap it all together into a new tech report for the entire Shaw Dome. You heard Paul mention that earlier. We'll pull up all that we have with the W4. We anticipate that'll be a much bigger resource, but we'll see. It'll also, all of our clean nickel work in the lab, we'll pull up and shoot and have into a new tech report what we've learned about bioleaching, carbon sequestration. Plus, we anticipate being able to do additional drilling into some of those other high-grade targets, and maybe also in potential additional acquisitions we may be able to make. So it's a very exciting time. We're just getting started. We've got a huge amount of exploration ahead and very clear news flow with those catalysts on the horizon. So that was our quick run through. Taylor, do you want to take it back over?
Sure, sounds good. Thank you very much, Sean and Paul, for that great presentation. So now we'll turn to the Q&A portion of the webinar, and just a reminder to everybody on the line that you can type your questions into the chat box at any time. To get going, maybe just, diving a bit more into the strategy. You talked a lot about both the large scale potential, those large scale targets, as well as the high grade. Is there a particular, focus for you guys, or like how are you dividing kind of your approach to exploration on that front?
Yeah, we want to stay down those 2 tracks. We want to have the high grade and the low grade. We think that sets us up best for genuinely building a business. We spoke a bit about that, the enormous potential of the large scale up, especially in the CarLang, where we're just getting started. But we think that if we can find additional mineralization like we have down at W4, like there already is on the books with other private companies across the Shaw Dome, with good grade mineralization, perhaps subscale on the tonnage, but just needs to be expanded or potentially combined. We think that's a great way to set our business up with those 2 tracks. The high grade mineralization that we know is in there, that southern part of the Shaw Dome, and then up on the Dunites, we think there's enormous potential. So it's still to be proven if the Dunites and that sort of grade can stand on its own legs. I think it has a much better potential to stand on its legs if it is blended in with much higher grade stuff that we can find elsewhere on our property. So to answer your question, we're going to continue down the 2 tracks. Okay, great.
And then in terms of kind of the local players, you mentioned kind of the private companies that are there, as well as some public ones in the area. Maybe just give us kind of a rundown. You talked a little bit in terms of the comps earlier, particularly with Alexo Dundonald and what they have, but maybe just kind of, outline that unique aspect that you guys have compared to your peers in the area there.
Yeah, so peers in the area on the nickel front would include Class 1, which is sort of 3 times our current equity value, where they have a similar, a little larger resource than we currently have, but they do not have on their property the large scale potential, nor do we believe as much potential exploration with additional high grade mineralization. So that's sort of the quick summary of how we think we stack up against Class 1. Obviously, the other sort of gorilla in the camp would be Canada Nickel, which has enormous potential with additional large-scale mineralization, where they've pivoted in a way from being entirely focused on the Crawford Main to having accumulated additional land. As Paul mentioned, to folks who know the camp, it's no real surprise that there are additional large-scale targets up there. And it seems as though they're growing that and potentially coming out with an even larger resource. But the reality is no one has been able to prove the economics of a 0.25% nickel grade into a nickel business. So that's, again, back to why we're thinking about these two tracks, because I think that the jury's still out on whether that can be economic. Again, coming back to Paul's experience in exploring with Outokumpu, where they were looking at that time for 0.6 or above. So that's how we would compare, I think, in a way, our potential with the high and the low grade, in a way, differentiates us from CNC, although they have had tremendous success marketing the low grade, the large scale. And then the other player up there will be Class 1, where I think our land package is a big differentiator from Class 1, in that we can talk about how prioritization of targets is one of our biggest challenges. And I don't think that's necessarily a big challenge over on their side. So those are the two main comparables. To our south, there's other publicly traded juniors. There are properties, I guess Aston is to the south as well. But our understanding is, well, Paul, do you want to speak about the mineralization of the other public companies to our south?
Well, there's a couple of showings. There's the Texmont mine, which is owned privately by a group that had, it was mined in the 70s, and it was about 1% nickel, and there's still some supposed non-43-101 compliant resources there. You also have the Softman deposit, which is owned by CNC. Aston is looking in the Dunites within that area and is having some reasonable success. So I think it is just another example of how prospective these komatiitic flows are in the Timmins area. That it really just, it ups it. Like, I find that a high tide floats all boats. And if we can gain enough interest and enough mass in the Timmins area, that it'll certainly take off as a major nickel camp.
And then with the private companies, so the vendor who talked to us about folding in more assets into this consolidated Shaw Dome play that we're working on.
Right. Okay. So yeah, very compelling opportunity, it sounds like, with the strategy you have and compared to kind of the peers in the area there. So that's great.
Yeah, that the high-low thing is really, we're going to continue down that track.
Mm-hmm. Okay. And you mentioned the Redstone Mill. In terms of, and during the presentation, you talked about having kind of a hub and spoke operation potentially. I guess before getting to that, obviously that would kind of be your own facility once you get a certain level, a critical mass, if you will, to support that. Is the Redstone Mill or other infrastructure in the area possible if you wanted to ever do something kind of a smaller scale in the interim?
Yeah, there's a lot of options. So Redstone is continuing to function as a toll miller with a focus on gold. But again, we're very close with that group, and that's frankly where our exploration team is based, out of the Redstone Mill currently. There's also a second mill permit on the books with the government on the Shaw Dome called the Carshaw Mill, which we announced we have agreed terms with the private owner of the Carshaw Mill claims, where we are looking to potentially locate our exploration operations, but also importantly, there's an existing tailings there with whom we're talking with the current owner plus the province to see if there's a way we can potentially recover nickel out of the tails, but and doing some reclamation across that site, we anticipate kind of puts us on second base for permitting that site again, because it currently has an historic processing permit, but again, it's with a private company, and there'll be a lot of work to be done to get that going again. But there's options up there. So there's the Redstone Mill, there's the Carshaw Mill. We have terms on the Carshaw Mill. We're very close with the owners of the Redstone Mill as well. So Taylor, there's options, but as you mentioned, if someone was going to build a proper clean nickel business, they very likely would want to set up a new processing hub and draw in from various ore sources around the spokes.
Perfect. Okay, and you talked a bit about the metallurgy and some of the optimizations that you're going to be looking at and what are currently being looked at. What do the recoveries look like right now? Obviously, there's been historical production in the area, and I know there's been some previous work that's been done as well.
Yeah, Paul, do you want to run us through the work that SGS is doing now and sort of what
Sure.
circuits they're analyzing?
Basically, historically from the Shaw Dome deposits, your Langmuir number 2, your Langmuir number 1, your Redstone, they've had recoveries in and around the 80 to 85% range, which is fairly standard for nickel. Basically, at W4, the preliminary work came in a little bit lower. It came in at about in 65 to 70%, but we feel that they didn't optimize the actual flow sheet. So now we're having SGS do the bench scale flotation test work using both the Strathcona Mill and Redstone Mill configurations so that we can optimize the recoveries. And basically, we're doing the test work to see what we have to do to improve the recoveries, like, the grind size, what type of desliming you have to do to get the talc and the serpentine out of your concentrates, and really target a good recovery with a high-grade concentrate.
Yeah, so the met work which had been done was from the prior work from 2010, 2011.
Yeah.
And that's what we're redoing now with SGS, really trying to match that Redstone circuit. Because as Paul says, we think there's a lot more potential. So that's out late summer, September. We're going to be talking about our met results out of SGS. And it also comes back to, as Paul was saying before, but the nickel tenors and the potential for W4 to come out with a really nice concentrate. So we're keen to see what the results are from that SGS network, because we think it's going to be a really nice part to the story, that there's a wonderful con that would come out from W4.
Perfect. Okay. I have a question, just wondering about the current financial position. I know you guys just did a financing. Kind of where do you sit and where is that going to get you to?
Yeah, we've got $3.5 million cash. And that was really bolstered by the 2.2 we brought in to flow through a couple weeks ago. So we're well set. It's up to us how quickly we want to burn through that. But on the current drilling schedule, that has us going well into 2023. So we're a junior explorer. We will have to raise again. But the great news in this market especially is that we don't have any cliff ahead of us in September or whatever it is. So we bought ourselves time to do everything we're talking about through the end of the year and into the beginning of next year.
Perfect. Okay. So I think we're getting low on questions. So maybe I'll just leave it to you to kind of sum things up, maybe give a final pitch or final thought to investors, and then we'll wrap up.
Yeah. Thanks, Taylor. And again, thanks everybody for participating today. Hopefully you've heard, if you're new to the story, you've heard that there's an enormous amount of potential for us. We're playing both tracks, wherein we've got the high grade mineralization with the type of grade that historically gets turned into mines. In addition, there's enormous potential for us to have a large scale set of deposits across our property with that lower grade material. And we're doing all the things now to try to pull together a clean nickel business. We see a combination of ore sources at a large scale. So keep an eye on us. We've got a lot to do, and we've got a huge amount of news flow and catalysts right over the near term, where we think we've got a very exciting story. And I'll tell you, there's more incoming calls than there are outgoing calls as investors. We saw this with our financing recently. They plow into the company because they see how much potential there really is for us.
Perfect. So I would like to thank Sean and Paul from EV Nickel for taking the time today to host the webinar with Red Cloud Securities. And thank you to everybody on the line for tuning in with us.